inflation data. We got two good prints, one yesterday and one today, and it was out of the park. People are happy. People are celebrating. People are taking their money and they're throwing it back into the market. People are going into debt, taking up margin and throwing more money at the market. And the fear and greed index, that's even like back to neutral. So yeah, that's awesome times. And the reason for all this is basically just for inflation data. But we've gotten a lot of readings over the years. It's never made this big of an impact. So yeah, well, that's because this time around, it will probably cause the Fed to pivot. And the Fed pivoting, it basically means that their next decision will be affected on how much they will hike interest rates. Are we going to get another 0.75% or 75 basis point interest rate hike? Or are we going to get a 50 basis point interest rate hike? And we all know what lowering interest rates means. Lower interest rates basically means that there's more liquidity in the market. There's more money going around. Money is easily accessible. And that in turn basically means that the economy will start spinning a bit fast, that the economy will just basically get boosted. And that in turn basically means that the bear market that we're in now will stop and it will turn into a bull market. So yeah, that's basically the cause of events, the chain of events that leads to why everybody's celebrating about the latest inflation data. But we have to also keep in mind that this is not final. The fact that the Fed will pivot and change their next decision is not final. We don't know that. We just think that. We only will actually know that in the next month and 10 days. I think it's about the 21st of September, the 20th of September. That's when they will actually decide and give a press release of what the next interest rate hike would be. The next thing to keep in mind is that the Fed is basically, they base their decision not on the CPI, but on the PCE. But I have done a little bit of comparison, and you'll see here there's the chart that I've overlaid where the CPI and the PCE do follow each other very closely. Obviously, the scale is a bit different because the percentages are not the same if you look at the absolute values. But when the one goes up, the other one goes up. So yeah, we will definitely, I'm pretty sure with a CPI drop like we've seen now, we will definitely see a drop in PCE on the next print. Another thing to keep in mind is that we are still on an 8.5% inflation rate. That's still ridiculously high. This is still the highest it's been in 40 years. So it's basically dating back to the 1980s. And what we need to keep in mind is that it's not, so at the moment obviously we've seen that we might possibly have reached a peak where it's starting to turn around, but what we also might keep in mind is the area under the curve. So if inflation drops to 6% and then stays there for 2 years, it will actually be more damaging to the economy than if the inflation rate would have to spike up now to 10% for 1 year and then drop down back to the sort of 2.5% average. So it's all about how fast the interest rate is dropping. Just the fact that it turned around now, yes, it does signal that maybe the interest rate hikes are actually making an effect. But it still doesn't mean that we're in the clear. We're still far from the clear. There still needs to be a substantial amount of interest rate hikes in order to bring us back down now. So yeah, the other thing we need to keep in mind also is that the yield curve is still below zero. It's sitting on about minus 0.4% now, which usually indicates a future recession. So we might either go into another recession or the recession that we're in might be extended by a lot. So there's still a little bit of caution that needs to be taken before we get too optimistic and start partying in the streets. But I've sort of looked at other indicators and other reasons that there are that we can get optimistic that's not inflation or directly inflation related. And there's actually quite a couple. One is that the velocity of money is on the increase. And the velocity of money is how many times or how quickly one unit of currency or $1 basically goes through the economy, like almost in circles, if you want to sort of explain it like that. And that's on the increase, which basically gives you the speed at which the economy turns, which means the economy is actually speeding up. And then the reverse repo, that's been running flat for a couple of months now. It's been on 2.2 trillion. So the reverse repo typically goes up if there's too much money in the market. So the reverse repo is when the bank's actually sitting with too much money. The repo rate, the normal repo, is when the banks don't have enough money and they need to borrow money temporarily. But the reverse repo is they have too much and they have to just stash it somewhere because they're just sitting with too much money. So that's been flatlining. It's still at 2.2 trillion, but at least it's running flat. It's not going up anymore, which also indicates a turnaround. So credit default swaps is also down. So credit default swap is basically an insurance that you take out on behalf of other people if they default on their loans. So institutions typically take out these insurance if they have a high belief that people will default on their loans and their debts. And if that's going down, it basically means that there's less belief that people will default on their loans, meaning there's actually more trust that people will pay their loans. So that can also be seen as a good thing. Another good thing is that the copper price is still going up. The copper price took a major dip recently, but now it turned around and it's going up again. That usually indicates that there's a big demand for fabricating new goods, but it's kind of a two-way street because it can also push up inflation. That may be why it's going up. So maybe read that the way you want to read it. Investor sentiment is really good. That's also been increasing. We're on about, I think, minus 8%. So the difference between the bears and the bulls in the market is about 8%. So it was, it's coming up where it was very, very bearish views of the market, where we're moving towards a bullish sentiment now. Crypto fear is also subsiding. People are getting a bit more greedy in crypto. There's a lot more money flowing towards crypto, which signals that basically the general sentiment of investors are positive. And then unemployment rate is very low. And we also got obviously a good jobs report. Our non-farm payrolls was also out of the park. So there's been some really good prints that has come our way. Another good print is inventories. They are recovering from a lot of obviously the value or the supply chain has been disrupted in the last couple of months, but it seems like inventories are finally recovering. And that can also help inflation to come down. So these are the reasons to actually be optimistic about the market. So I think there is actually a good reason to be optimistic at this moment, but keeping in mind that there's still three prints coming when it comes to inflation. That's still one more PCE, one more CPI, and one more PPI. And based on that, we'll have a bit of idea of what the Fed will decide, if they will, how extreme the pivot will be. So I'm pretty sure that there will be a pivot. It just might not be as extreme. What we can do is, or what I'm going to do, is sort of focus on some indexes and ETFs. In a period like this, it is going to be very volatile. Some stocks are going to up, others are going to go down. They're going to go up and down. But obviously, if you put your money in an ETF or in an index, it will average out a lot of those fluctuations and you'll get a nice stable return on your investment. So good place will be the QQQ or the Nasdaq. For now, that's sort of what I can think of right now, what I can come up with. I think that's basically... There's also the SPY V, or the SPY G, sorry, which is the growth ETF inside the SPY. That's also another good place to put it. So if you like this video, then remember to press the button. If you want to see more, remember to subscribe. This is Steve. Until next time, ciao.